Good morning, everyone, and welcome to today's webinar, Flat Pay Rates. My name is Preetha Iyer, and I'll be your moderator. I work in the marketing team here at NatRoad. Pleased to introduce today's speaker, David Johns. David is part of our member advisory team, and I'm sure a lot of you have spoken to him already. Today, he'll be talking about how employers can ensure that they're meeting all minimum entitlements before deciding to pay their employees a flat rate. Before I hand over the mic to David, just have a few housekeeping items to go over. We request that you put your microphone on silent to avoid any disturbance during the webinar. We'd love to hear from you during today's presentation. If you have a question, you can enter that in the control panel, the question pane of your control panel. You may send in all your questions. The questions will be answered at the end of the session. Once you leave today's webinar, you'll receive a survey on the presentation, and we'd appreciate if you can take a minute to complete that. I'll hand over the mic to David. David, over to you.
Thank you, Preetha. Welcome, everyone. Today's webinar, as Preetha's indicated, is primarily on flat rates. However, just to make sure we're all on the same page, I'm just going to go back over some of the standard provisions in relation to modern awards, terms of contracts of employment, before we then move into discussion on flat rates. So hopefully, as everyone already knows and understands, basically, most of the work performed in Australia falls under the coverage of what we call modern awards. Awards that have existed for many years, but as part of the movement to the Fair Work Act, all the thousands of awards that did exist prior to award modernisation were completely reviewed as part of the award modernisation process with the implementation of the Fair Work Act, and it ended up with 122 awards, replacing all the awards that existed prior to that time. Hence the term modern awards, because it was part of the award modernisation process which these awards came from. Now, whether an award applies depends upon the provisions within that award as to what aspect or the totality of the industry that they're proposed to cover. So like with the road transport awards, we actually have two awards which cover the vast majority of the work performed from a driving basis within the industry. However, there are times that an employee may do work under one award for part of the day and then transition into work under the other award. So the awards provide the safety net. So they provide the minimum rates of pay and the terms and conditions which apply under the award. However, if an employer has an enterprise agreement, which on the slide is referred to as a registered agreement, then in fact, an enterprise agreement subject to the wording of the enterprise agreement can cover all matters pertaining to the employment relationship to the extent that it excludes the award. However, there are times where the specific wording of an enterprise agreement may actually call up sections of the award. Now, to work out which award applies, because again, a lot of our members not only have road transport drivers, but you have clerical staff, other maintenance staff. So again, it's not just the road transport awards that will apply to your business. So in working out which award applies, there is a coverage clause, which is typically clause 4 within the modern award. That gives you a breakdown as to what is covered. Quite a lot is not covered sometimes. Guidance can also be had when you look at the classification structure within the award, the classifications, the titles, and if there is a narrative or an explanation as to what that grading actually covers, then that will give you assistance as well. However, at the end of the day, that is what we are here to assist members with, and it's simply a matter of picking up the phone and having a conversation with Richard, Brett, or myself. Now, as I've already indicated, there are quite often circumstances where employees may be covered by more than one award. And the two road transport awards, which I will, again, through this webinar, continue to focus predominantly on, where an employee is doing local work, but then they have cause to temporarily perform a long distance operation, they'll move from the transport and distribution award to the long distance award, and there is an allowance to be paid in those circumstances. So the key thing that I want to leave people with today in relation to the awards, it is essential that you know which award applies to each of your employees and you refer to those awards often, because part of the issue is making sure that you're all compliant and paying the correct rates, whether you're paying a flat rate, whether you're paying absolute as provided by the award, an hourly rate with overtime and all these other things. It's key to making sure that you're paying your employees correctly, because the onus, as an employer, the onus rests with you. And as I'll cover off later on in this webinar, significant penalties can apply when you get it wrong. And that's the last thing we want you to fall into that space where you're actually being accused of underpaying people. Just one rider on that, it is always good practice and to have a copy of the award available in the workplace so that employees can actually freely access it and review it. Now, the second element that I want to cover off before we really get into the flat rates is a contract of employment. Now, contract of employment is created, or a contract is created by at its simplest term, by an offer and an acceptance of that offer. Now, it's not that long ago, because a number of members, I'm aware, still operate on that basis, typically what they call a handshake. You make an offer to employ someone at, say, $25 an hour, and the driver says, yep, I'm happy with that, and you shake hands. That comes with a lot of risk these days, because the employment relationship has become very complicated, is probably the best way to put it. There are multiple elements there which really lead it down the path of having these things in writing to make sure that there is no misunderstanding between the parties at the end of the day. While the relationship is traveling along nicely, having it in writing often doesn't add anything to it. But if there becomes a glitch, if there becomes a bit of an upset between employer and employee, then having the terms that are agreed in writing makes things a lot more simple. So as it says, the contract of employment should cover off those essential terms and conditions between the parties and be as comprehensive as required for your business. Now, depending upon the level that the employee is engaged, whether it's a base level job or whether it's actually a senior role, some of those elements would dictate how complex or how comprehensive some of the terms within the contract would be. If you've got someone performing a sales role, you may want to have restrictions in relation to their ability to take clients with them if they were to leave your business. So again, it's what is relevant to that employment relationship and the level of that employment relationship. One of the things that we really promote is that policies should be expressly stated as not forming part of the contract and are not incorporated into it. Part of this is so that at the end of the day, a policy is a living document, and you will need to vary that at times throughout the life of your business to maintain its compliance with legislation and things like that. If it's incorporated into a contract of employment, as it says at the bottom of the slide, contracts can only be varied by agreement once they're signed and accepted. So your ability, if the policies are incorporated into the employment contract, your ability to amend and adjust those policies is actually hampered. Now, some of you may have seen matters in the press recently, in the media, about a case which has now become known as Skeen, where Mr. Skeen took on his employer work pack in relation to entitlements to annual leave. He was a casual employee, and part of the problem that arose in this was the fact that there was not clear evidence of payment of the casual loading. So what we say is the best way to ensure minimisation of risk around the use of casual employees is to make sure that both in the contract of employment, pay slips and everything, it is clear and that, through a separate notation, that the casual loading is being paid. And Brett, Richard and I can advise you and assist you on these things. Again, it's a simple fact of picking up the phone. All right, so flat rates of pay. Let's make sure we all understand what we're talking about. So as it says on the screen, a flat hourly rate of pay is when you are paying the employee the same rate for all hours worked, regardless of when those hours are worked. So the flat rate does not increase when they're working overtime or for hours which are out of those social elements, such as weekends, if you've got shift work going into family unfriendly hours and things like that. So it is a flat rate that is paid for every hour worked. All right. Now, this comes with some real areas that you need to be careful of. So let's have a look at those. So if you and your employee want to arrange or negotiate a flat rate of pay, the wording I've used on the slide is the only way to do it correctly is with an individual flexibility agreement, which is, again, we like to abbreviate these things, an IFA. It is not the only way, but it is the most straightforward and least complicated way of doing this. There are provisions for set-off clauses and other things like that, but again, for a base level employee, set-off clauses and other things like that just complicate the situation. We have the provision within the modern awards under the flexibility arrangement clause to do an IFA, and at the end of the day, this is the simplest and most straightforward way for a business to achieve that outcome. So the benefits of a flat rate, largely it's that element that for the person who does the payroll, be it you've got a proper payroll clerk, or in fact, you've got a lovely off-sider spouse who does the books for you or other things like that, it's an easier way of calculating the payments to be made to an employee, because if the employees work 50 hours, it's 50 hours by the hourly rate. For an employee, one of the attractions is it's a more consistent weekly wage. They can actually better plan when they go to the bank for loans and other things like that. It's a lot more easy to understand the pay slip, and it can make it more attractive because it looks like the employee is actually earning more than sometimes in the breakdown when they're being paid as per the award. Okay, so individual flexibility agreements, what are they? Now, again, I'm talking the road transport awards, but all modern awards do contain a flexibility term. And when we say term, I often refer to it, it's a clause, but the Fair Work Commission talks about a term. We have a dispute resolution term. We have an individual flexibility term. So in the awards, I think off the top of my head, it's clause 7 of the award. And it's this flexibility term which enables an employer and employee to agree to vary the effect of some of the award terms. And through this mechanism, customise the arrangements to suit their need and your need. Now, part of the restriction is that you can't undermine the entitlements specified in the award. So you need to ensure that at the end of the day, that rate that is being paid each hour of work will actually not disadvantage the employee, and that in fact, not only not disadvantage, but that they're better off overall at that flat rate under an IFA when it's compared to their award conditions. So the provisions under the individual flexibility arrangement clause limits what can and can't be included in an individual flexibility agreement. So what can be included is when the arrangements for when work is performed, such as start and finishing times, overtime rates, penalty rates, allowances, and annual leave loading. So in actual fact, what we can construct is a single rate which takes into account if there is overtime work which forms part of it, if we want to include the annual leave loading rather than having to worry about that at other times, the travel allowance under the Transport and Distribution Award, other allowances, we can include those within the IFA. So overall, an individual flexibility agreement can be quite a straightforward document. There are some elements which need to be set out in it, which we can assist you with. We can even provide templates for them. But there's a few pitfalls that you do need to be aware of, or things that can cause you grief if you're moving into it without having really thought about it. Now, an IFA can only be made after the employee has actually commenced work for you. So you can't engage a person on the basis that you have to agree to an IFA. That's actually unlawful. You also cannot coerce or force an employee to enter into an IFA. And if they don't accept it, you can't treat them any differently than you would as if they had accepted it. Now, a key thing, because every year the award rates are reviewed at the end, well, to be effective from the first full pay period on or after the 1st of July, that flat rate that you agree is not locked in for as long as this IFA exists. You will actually need to recalculate that rate at least every year to take into account any increase that is made in the minimum rates within the award. As I said, those rates are always effective from the first full pay period on or after the 1st of July every year. Now, making an IFA can be a straightforward process if you just adhere to a few simple things. So either party, while again, a lot of things are drafted on the basis that the employee approaches the employer, either party can approach the other with the request to make an IFA. So again, good process dictates you have a good discussion about it, because at the end of the day, you as the employer bears the responsibility for ensuring that the IFA is properly drafted, is compliant, and at the end of the day, the employee is better off overall under that IFA. To have any power at all, the IFA must be made in writing. As you would anticipate, if everyone's happy with the arrangements, both parties sign the document, and there is a proviso there that if the employee is under 18, a parent or guardian must also sign as to confirm that the juvenile has agreed to the terms. As with any employment record, you keep a copy as the employer and you give a copy to the employee. That copy is a legal document which if there are disputes in the employment relationship, if you're audited by the Fair Work Ombudsman or other appropriate regulating authority, you will need to be able to produce a copy of that IFA, the same as any employment documents, timesheets, or other leave applications, etc. So this brings us to the Better Off Overall test, and this is what has the highest potential to trip people up. So what happens when the boot is performed? You're basically comparing that hourly rate against what the employee would earn under each element of the award. So that takes into account the ordinary hourly rate, the rate that's payable for overtime, the rates that's payable for penalty rates for weekend work, meal allowances and other things like that, anything that you've incorporated into that hourly rate. Now, I'll come to it in just a moment. We do have what we call a calculator to assist. It's set up in a simple spreadsheet and we can assist you with that or provide it to you as well. Now, one of the key things to remember is that there is a bit of crystal ball gazing. You need to work on the basis of what the potential, the highest earnings the employee may earn per week. Because again, if the employee exceeds those hours that you have included in the IFA, then you will be found to have underpaid them if you don't then pay them an additional amount for those hours work that you didn't include in it to begin with. And as it says there, accurate record keeping is crucial. So that's timesheets, when the employee took their meal break, things like that, all being properly recorded. So this is a picture, so some of the detail that is actually set out in the spreadsheet, giving you an explanation as to what each box and everything means, to make sure that the slide shows the detail at a considerable size. I've left all that detail out. But basically, if you have a look at it, the grey cells have formulas or information which is not adjustable. The white cells are the ones where you do make the entries as to what suits in that situation. So if you look to the right-hand slide, there's a table there. It sets out the rates for a so this is the Road Transport and Distribution Award. It sets out the rates. I didn't include a grade 1 or 2. It sets out the rates from a transport worker grade 3 to a transport worker grade 7. So coming back to the main grouping of cells on the left-hand side, that yellow box then is the box which you would actually enter the rate for the appropriate classification. So that's the minimum rate to be paid for each ordinary hour of work. So looking at that first line as we go down, ordinary hours per week, under the award, a full-time employee works 38 ordinary hours per week. So that rate, if you look at the rate box, it's 1, so the multiplier is 1. So basically what the calculator does is it calculates 38 times that 22.35 to give us a total of $849.30. Now, moving down, again, overtime under the award, the first 2 hours are time and a half and double time for every hour after it. Now, you may notice if you're looking carefully, there are some little red triangles in the top right-hand corner of this rectangular section on the spreadsheet. what if you hold your cursor over that on the calculator, it would actually tell you that it takes into account in the formula the fact that with the performance of overtime beyond that 2 hours, that a meal allowance is payable, and it automatically includes that in the calculation. But basically, this is set up to demonstrate an employee who is working 54 hours a week, so notionally 10-hour days plus with 4 hours overtime on a Saturday. So by filling out that, so the 38 ordinary hours a week, doing 10 hours a day means that across a week, there's 10 hours at time and a half and 2 hours at double time across the day. So 7.6 hours, then the first 2 hours at time and a half, it leaves you that balance of 0.4 at the double time. Saturday then, it's calculated at, actually, I might have an error in that, but for the purposes of the discussion, you plug in the number of hours and it gives you, if we come down, total annual salary, it takes into account then the number of hours and it performs the calculation to give you the average hourly rate across that range of work. Now, if for some reason someone starts working an 11-hour day during the week or a 12-hour day during the week, then the calculator has been completely thrown out and you'd need to recalculate that average hourly rate. Now, that average hourly rate meets the award prescription. It is not, at the end of the day, better off overall. So in actual fact, if you were working that arrangement and the average hourly rate was $27.91 per hour, you have to actually, you're needing to be paid 92 cents or 93 cents per hour to actually be able to demonstrate that the employee is better off overall. However, for something like that, practicality says you'd probably round that up to $28 an hour. Now, one of the things to consider about striking a flat rate is that superannuation is paid on ordinary hours of work, not overtime. However, when you move into the flat rate regime, you're actually rolling up ordinary hours and overtime into the one rate of pay. So your superannuation bill is actually going to be being paid on all of the hours which are part of the flat rate, which is going to increase the superannuation cost within your business. Now, there is a superannuation guarantee regulation 2009. You can seek to get a individual determination off the ATO for the circumstances to try if you can demonstrate the distinction between ordinary hours and other hours, but the good old ATO makes those pretty hard to get, and at the end of the day, sometimes they're not worth the bit of paper they're written on. Now, the key consideration for all this, and a lot of the conversations I have with members, or we all have with members, is that with flat rates, underpayments can occur very easily. That very element, you saw what needed to be taken into account in the calculator. If you just simply go, $25 sounds pretty good, yep, we'll agree on that, and you can't back it up as to how it meets every condition under the award and making sure that it's better off, then you can move into the territory of underpaying your employee very quickly and easily. And the Fair Work Ombudsman is the primary regulator, a government regulator, but unions and the occasional other party will have rights to investigate underpayment of wages issues as well. So the Fair Work Ombudsman is the primary regulator, and they not only can investigate, but they can prosecute underpayment of wages as well. So I'll come back to that in just a moment, because there's a huge sting in the tail when the Fair Work Ombudsman generally gets involved. Employees themselves can also pursue a claim for wages in a magistrate's court in each state or the Federal Circuit Court. And I do note that there's other courts of competent jurisdiction, because there are, in some states, there's specialist industrial courts which they can make their claim in as well. Key thing to be aware of is claims can be made for 6 years from the date when the employee was supposed to have been paid the entitlement. So underpayments can become very costly when they go over a number of years. And while it may only be even a number of cents per hour, when you think about the number of hours an employee may work per month, per year, and then over 6 years, these things can increase exponentially at a very quick rate. And then if I've recently been assisting a member where an employee made an inquiry with the Fair Work Ombudsman, and the Fair Work Ombudsman then approached the employer. In this instance, I think the matter's been resolved reasonably well, but in other instances, that can trigger an investigation by the Fair Work Ombudsman. And I think it doesn't take too many looks over recent media articles, newspapers, and other things like that, because at the moment, the Fair Work Ombudsman is regularly making media releases about their prosecutions, not only on their website, but in the media. And I think we've all seen those with some pretty high profile restaurateurs, other businesses, more recently Woolworths and others, where they've either self-reported or an investigation has commenced into the business. And well, one of the latest releases on the FWO website, dated the 29th of November, the headline is, "A failure to provide meal breaks has resulted in a national parcel delivery company, Couriers Please Proprietary Limited, underpaying staff in an amount of $382,065 over the period of 8 years." So once the FWO gets involved in it, these things can become beasts unto themselves. So again, look, some people might think I'm harping onto it, but we just see it too often where these things can, as I said, spiral out of control very quickly. So the Fair Work Ombudsman is the primary regulator. They can investigate suspected underpayments or other breaches of the Fair Work Act. They can conduct audits. They can issue compliance notices. And if they issue notices, you can actually, if you don't cooperate, you can be breaking the law. If you provide false information, then the prosecution can be even worse than if you fully cooperate. The ATO also, from a PYAG tax perspective and payroll tax, a hidden one which even I wasn't fully aware of until recently. If you're late in making superannuation payments, then in fact, not only as the superannuation guarantee applies, it also changes complexity. Rather than superannuation based on ordinary time earnings or OTE, if you haven't paid it in time, part of the process then is that the superannuation that is required to be paid is actually on gross income. So where you may have underpaid 20,000 in superannuation contributions, that can escalate quite quickly up to something like 50,000 very quickly. So the key element then, once the authorities get involved well and truly, the potential for litigation is well and truly there. And it's not just the amount that has been underpaid, but there are penalties and fines that can apply. And again, at the moment, there's a huge push, rather than just terming it underpayment of wages. The latest catch cry from the unions and some other interested parties is wage theft. They're calling it wage theft. And there's a huge push when you've got some of the restaurateurs and some of the others, simple calculations which have ended up hundreds of thousands of dollars in back pay owing. The government is proposing even higher increases in fines, also for the jailing of the really bad cases. Now, just to really put it into the picture for you, under the Fair Work Act at the moment, where there is one contravention of the Act, such as not paying an employee overtime rates or something like that, there is the maximum penalty for an individual involved. So that can be a director of the business, can be a HR manager, can be the payroll person. If they're knowingly doing this, can be up to $12,600 per offence for an individual. The penalty then increases to $63,000 for a body corporate. If there is deliberate misconduct in the underpayment of people, then it can attract penalties 10 times this much, meaning that an individual can be fined up to the amount of $126,000 and corporations $630,000. So if these get reviewed and up, you can understand that it's probably going to have a pretty significant impact not only on your business, but actually on you as authorities within. So,
questions, or you can just ask through the questions panel. We already have someone asking.
Yes, so look, the part of the element which we do for every webinar is to make sure that our slide presentation is available. And in fact, part of the reason for promoting the flat pay calculator is the fact that we can make it available to employees rather than to members, rather than trying to download it off our website, which can sometimes have a few hiccups. It's best to just drop an email to Brett or myself, and whoever you normally deal with, or to myself, and I can shoot that out to you and we can customize it to the needs of your business as well.
Sorry, quite a few people have said they can't hear us. Sorry about that. The connection is going in and out. If you can hear us now, if you could just type in your questions, or like I said, I've unmuted participants, so you can go ahead and ask, whatever questions you may have.
We've still got audio? Because they're all 11:37 or something.
Yeah, so.
Hello,
Does anyone have any questions at the moment?
all right, look, for those that can, it looks like we've just had a bit of a glitch at about 11:37. We had a lot of people reporting that we've got a bad connection, having difficulty hearing me. Look, I would encourage you to contact us and put your questions. Richard's on leave at the moment. Brett and I are available, and more than for particular circumstances.
Yeah, Eric, if you have a question, go ahead and.
Look, what we might do is we'll actually, to everyone who logged in today, we'll automatically send you a copy of the slide presentation and a copy of the calculator. Except that you might need to make some variations to the calculator, but you can see what I was talking about. So, all right. With that, for those who are still online, thank you very much for your participation and attendance today. And we look forward to conducting more webinars in the new year. Thank you very much. If we don't talk before Christmas, please have a Merry Christmas and enjoy it with your families. And we'll see you in the new year. Thank you.
Thank you, everyone. And sorry for the disturbance. You'll get a survey once you shut down the webinar. So please, if you can take that. And like I said, like David said, we'll be sending an email just with the with the recording as well as the slideshow and as well as a link to the pay calculator. If you have any questions, feel free to write in. Thank you so much.